So we can start. Okay. Hello, friends. I'm Josefa, CEO of Tradeplus, and I welcome you to this presentation on currency trading, jointly conducted by Tradeplus and Bombay Stock Exchange. Our host for this presentation is Mr. Sendilvelan, Regional Head South of BSE. Mr. Sendilvelan has a vast experience of 24 years, and he has worked with companies like EID Parry, Coromandel Fertilizer, Monsanto, and also recently with Multi Commodity Exchange. So this presentation would have a special emphasis on trading currency in the BSE segment. Now, apart from explaining the nuances of currency contracts and trading in general, Mr. Sendilvelan would also be talking about the advantages you get by trading in currency in the BSE segment. So do watch this presentation till the very end. Now, on our trading platform Rocket, we provide currency trading in both NSE and in the BSE exchanges. So our clients get a lot more option while trading in currency, along with the option to open positions in one exchange and close the position in another exchange. So this is because we have offered interoperability between the exchanges. And Mr. Sendilvelan in his presentation would explain more in detail about these options and advantages that you get by trading currency on our platform in Tradeplus. So I now request Mr. Sendilvelan to begin his presentation. And I also request our viewers that if you have any queries, please use the chat option in YouTube to post your queries. And we shall make our best effort to answer them at the end of the presentation. We'd also like to know from our clients as to how we can improve our currency trading experience with us. As in what features you would like us to bring to you that could improve your currency trading experience with us. So thank you very much, and over to you, Senthil.
Yeah, thanks, Sri Josefa. Thanks for the whole Navia team for giving me an opportunity to address the great Navia audience. So thanks for the great opportunity. And more than that, I wanted to thank Navia, the first broker who is in Tamil Nadu who has introduced the interoperability. So Navia, as usual, progressing better, and you are the number one in terms of introducing new technologies. That's what the market says. And to prove that you are the one who introduced the interoperability, and anyway, that this price also there in the pipeline. That's what I'm hearing. Yes. And that is one of the greatest things. Now we are really doing well. I'm really happy about seeing the interoperability. So thanks for that. Let me get into the subject now. Let's start this time on this. I have come here to talk about basically BSE presentation about the currency derivatives. So I don't know the audience background. Assumingly, I am thinking that my audience here are few of them are new in currency derivatives, and majority of them are experts in the currency derivatives. That way, let me assume and let me take the presentation from here. I hope my screen is visible there for all of you guys. So with this, let me get into currency. Why currency now? See, there are a lot of asset classes which is getting traded. You must be aware of commodity, equity, derivatives, F&O, and even fixed income group, now real estate investment. There are many things are there, but still the currency is the one which is getting a lot of traction now. Why is it so? Number one, the current peak margin scenario, one should look for kind of speculators or someone who is really looking to have more volatility, more revenue, or kind of intraday trader. I wanted to see a lot of movements in particular asset with less margin. I should be able to capture and get into the market. If that is the case, the currency is one of the best options, where basically the low margins of 1,500 rupees enough for a future and 500 rupees enough for options. And basically, it's a red bone market. When compared to other asset classes, we must be seeing some asset classes like crude oil and all touching zero and going below that. And we must be seeing now today, all the equity asset classes touching the skies. So there are a lot of asset classes which is having a lot of volatilities. One way it is good, the other way it is not good. But for a guy who is not really tend to take more of risk, This is the better asset class where it generally does not have greater volatility. And the fundamentals. See, for one to understand the price movement, one should have the analysis of fundamentals. We say currency fundamentals are very easy. For example, any currency trader will know today, for example, the market when census goes up means like theoretically assume that FPA investments are not coming in, AA investments coming in because of the dollar inflow, they will keep them to appreciate, then they will go on short USD INR. Very simple fundamentals. Any monetary schemes announced with the government of India or worldwide or any central government monetary measures, all are very simple, straight directions to the currency movement. So the only one asset class where the fundamentals are very simple and can be understood by any common man is the currency asset class. And one more thing, the options. Like for example, you have 15 in the money, 15 out the money, and variety of the contracts, variety of the cross currencies and state currencies available. So you have multiple options to trade between futures to options, options to options. So suppose somebody is a great trader in options and with futures, and this is giving you an ample opportunity for it to trade. And the most and important thing is low cost of transaction. I have never seen an asset class which has such a low cost of transaction, wherein within one tick one can make money. We'll see how it is. And peak margin, you all be aware of September 1st onwards, 100% margin is required. And because of this, many of the clients are not either trading or looking for other asset classes. That way, the currency as a great asset class getting more importance and more mileage and more attention in the customer point. That's the reason why today we've taken currency, which you should also learn if at all you've not learned before, and you should use it for trading or for hedging also. So now coming to basic currency, the currency market is basically a foreign exchange market. We call it as there is something called OTC market. In that open OTC market, we see banks and corporates majorly participating. There is spot trading is there. This is the only asset class which is traded for 24 hours. Spot also there are three things are there, like today, tomorrow kind of things are there, and cash is also called spot. And then forwards are there, options are there, which anyway we are not going to cover up. And we have now exchange traded asset classes, NSE, BSE, and MSCI also has our exchange traded future and options in the currency. This is the background. So now how the market started. Basically, Indian market is around 18th largest market in terms of daily turnover, and it's around 1.1% of global market. And basically, the RBI controls the OTC markets also. How in India it started? It started with 2008 and it had other currencies by 2010. And when it was starting around 2000 crores, now it is clocking around 70,000 crores a day. And there are a lot of cross currencies are there, and weekly futures and options also introduced in various other classes by various currencies by 2018. So the journey, how it started. When I was with another exchange by 2008, we only started the particular USD INR pair with 1,200 crore volumes. And later on, by 2010 type, the RBI allowed, SEBI allowed the Euro INR, GBP INR, JPY INR, all these other currencies by 2010. Then the volume has got increased to 40,000 levels. Later on, RBI had come and put a lot of restrictions on the banks' open interest, proprietary trading open interest, and all. Because of that, the 2014 time, it had a volume dip to the level of 15,000 crores a day. And later on, by 2016 type, again, SEBI permitted the banks' participation with the increased YI limits. And 2018 type, they again introduced, allowed NRI to participate, and again the foreign currencies, cross currencies, and all allowed by 2018-19 type. Because of this, the currency volume shoot up to the 70,000 level. And 2020 type, we are all allowed to introduce the weekly future and options in currency, and BSE had introduced the BSE USD INR options and futures by 2018, which is now doing extremely well. Though being a late entrant here, though NSE has, M6S6 by then started, NSE started later on, we were the late entrant, but now we are having major market share in terms of the currency derivatives. Now coming to, this is more important for everyone to understand. Let me introduce you the contract which is available in BSE. One is that weekly contract we have, which is USD INR. 1000 USD INR is the contract size and the contract price quotation, rupee per dollar. And you have 7 consequent weekly expiry contracts. And every Friday, the contract expires. Which means when the contract expires, it is around 12:30 type, the RBI gives the reference rate for that particular day. With that particular price, it will expire. Here, strike intervals would be quarter paisa. I call it as quarter paisa or 0.0025 rupees, we may call. In options, we have 12 in the money, 12 out of the money, and 1 in near the money. That way, call option 25 will have, and put another 25. We have 50 options contract. Span-based margins means our VAR plus ELM, and basically it will be around that 3% or less than that. And settlement as usual, T+1, and any of the contract like commodities, this is also even like F&O, it is a cash settled one. And daily settlement price, closing price is the last half an hour average traded price. And final settlement, as I said, it is a RBI reference rate, right, 12:30. Recently, it's not RBI is announcing the rate. RBI has appointed a subsidiary which announces the RBI reference rate for the day. So this is how it happens. So in the weekly contract, I'm saying $1,000 and the tick size is 0.25 paisa. For anyone to understand, 0.25 paisa is the tick size. If the currency moves by 1 tick, which means it will be in a profit of 2.5 rupees. 1 tick means, or 1 tick means 0.25, which means it will give you 2.5 rupees profit loss. So 1 paisa per movement will give you 10 paisa. 1 paisa movement will give you 10 rupees profit or loss. This is the basic understanding in USD. So same thing applicable for USD INR. Monthly contract, same $1,000 in euro, 1,000 euro, GPP 1,000, excepting the JP INR, in Japanese yen, which has 1 lakh for this one. Then we also have cross currencies. Cross currencies I will not get into because there is no great maturity, the market and liquidity, the market is yet to mature. So let us not bother about the cross currencies. We'll only now look into weekly USD INR and monthly straight contracts like USD INR, Euro INR, GBP INR, JPY INR. So trading times for the normal contract it is something 5 o'clock. For cross currencies it is around 7:30 time. So that is how the okay. Now I'll move to the next slide. This is important. Here you need to know, as I told you, the USD INR weekly contracts are more important. It is $1,000 and Friday expiry. So if someone enter in, if wanted to do trade in the expiry day, this is the most opt contract in the weekly thing. So now this is something like what is the difference between the OTC market? When the currency derivatives introduced in India, there are a lot of repercussions with other market participants like corporates and other banks and all. But this became very successful because of the very reasons like contract size, very small contract size, $1,000. You go to a bank, you cannot buy $1,000 a dollar. You have to talk about millions. And document underlying, if you come to the BSE or Navia, just fill up a KYC form and you get into this. As simple as it is easy for you to do the documentation and get trading in currency. Whereas the corporate wanted to do that, they have to go to a bank and fill all the complete formalities. It will take time and a lot of approvals and all there. Entry exit. You enter by 9 o'clock or 9:30, then get out by 9:31 possible in PSE currency derivatives. Whereas you go to a forward at the bank, when you wanted to get out, there is a penalty because the basically forward contract, you have to pay certain penalty for this or extra additional cost for this to get out of this. Whereas in BSE via Navia, you don't need to pay any extra charges. As usual, any other derivatives, you can enter and exit at any point of time without any hassles. And timing. So if we come to currency market, it is up to 5 o'clock. You go to cross currency, it is 7:30, and if you go to bank, it is only 4 o'clock, 4:30 time. So if you wanted to trade extra hours, that is available in the futures market. And fixes, as I told you, quarter paisa, wherein you go to a bank. For you, they'll offer 1 paisa. For someone bigger, they'll offer 50 paisa. For a bigger company like any other corporate, they may offer quarter paisa also. So that is another thing. That's the reason why BSE currency is picked up very fast. Price transparency, the same price only will be given to anyone whom's seeing the screen in BSE. Will see the same screen here in also, or Bombay also, Delhi also. Whereas in the OTC market, it is not so. The particular banker will price you spot plus forward plus banker margin plus penalty plus your collateral interest. All those things will get added into this, and you will not have a price discovery done properly over there. That is the reason why actually corporates started coming into this. And here, mark to market daily basis is done. You go to OTC market, as you ask, they'll give 1 week basis, 1 month basis. Accordingly, they charge you. Accessibility, anyone can instantly access exchange derivatives, but not OTC market. Transaction cost, as I told you, very, very cheap in the currency derivatives market exchange traded, whereas the OTC market it is not so. The beta spread may go up to 1 paisa, 2 paisa and all. And the option to come to this, there is no great documentation in exchange traded currency derivatives, whereas in the OTC market, there will be a lot of need for doing this. Okay, why currency basically introduced or RB approved or the exchanges really get into this means it is to give the benefit of an exporter, an importer, or a corporate who is into the manufacturing or exporting or importing. They wanted to do the currency, hedge the currency risk. How it happens? Basically, if I'm an exporter, right, I'm going to do 1 million worth of dollar. So today, if I'm exporting, today current USD is at 75 rupees. And tomorrow, when my remittance comes after 3 months or 4 months, if the price, if the USD goes down to 73 rupees, I lose 2 rupees per dollar into 1 lakh dollar, whatever. That is going to be my loss. So what do? Being an exporter, I will advise an exporter to sell that particular amount of currency in BSE USD in a contract. When he gets the remittance, when the USD are gone down, so he will get his remittance done. By then, I'll ask him to cover it back, square off this, so that he'll be making money in BSE, whereas he will be losing the money in the export transaction, which will get nullified, and his hedged margins, whatever his planned profits will be intact. That is what an exporter has to do. But in the case of importer has a risk of price rising high, which means when he is importing and it is at around 73, when the remittance, when he is supposed to make the payment, if it has gone down up to 75, he has to make 2 rupees per dollar extra, which will be affecting his bottom line. So we would ask them to buy the USD INR to that level, whatever the import commitment, and I'll ask him to cover it back in exchange while he is making the payment. So then he'll make money either in BSE or in the spot, and will get adjusted each other, and it will be nullified. Same case with euro, pound, and everything, right? So this is how this is what the real use of the this particular product. It was invented for this, used for this, and the risk, whatever the exporter, importer, or corporate get into this, they are into this. It is being passed on to the speculators, like anyone in the industry. Can be a speculator, or investor, or a trader who takes this risk. So coming to BSE currency again, so we started by November 29, 2013, and our daily turnover is around 30,000 crores, and weekly contracts introduced by July 28. So what is active now? Very good traction, which is getting traded at the most: USD INR, Euro INR, Pound INR, Yen INR, and the foreign currency, cross currency, we have Euro USD, GBP USD, and a dollar Japanese yen. That cross currency we have. And one unique contract which NSE does not have, only BSE has, is that USD INR weekly futures and options. Please mind it, NSE does not have the USD INR futures options. We only have this. So now, what is the advantage of BSE currency? As I told you, technology is we are the fastest tech in the world, and the co-location facility is there. The excellent rocket front end of Navia is there for you, and liquidity is enough and more. Anybody can enter at any point of time, because all the corporates whosoever wanted to hedge in millions, they come and fast, they get in, get out. And risk management, as usual, any exchange will have a proper risk management and settlement procedure. And we have corporates participating in, we have exporters, importers, and we have banks, we also have NRIs, we have FPIs are all participating. So participation is really vibrant, and no one need to worry about the liquidity here. And the innovative products. We also have paired contracts. So then, for example, calendar spread contracts are already available. The one can do that also. And you can create multi-leg orders, paired orders, weekly future and options also there. And futures to option to future, all those kind of cross-leg trading can also happen here. And all top of it, reasonable charges. It is not the cheapest ones. We have a fair price and compared to the other trading activities. Currency turnover, though we started, it has gone up to now today 29 close to 30,000 crores in September. It is getting traded. So this is another important slide where everyone wants to do. I want your attention here. Suppose I buy only one lot of USD INR here, say 74.33 quarter paisa, no, 33.25 that way. I buy and then sell. So my lot value, buy and sell value turnover is 1,48,000 rupees, right? 66. What is my charges? Stamp duty 7 paisa, another one CBT 15 paisa, exchange charge is 53 paisa in BSC I'm saying. Okay, and GST on that. Total put together, the features if I buy in BSC per lot, one lot I bought and sold, it is 61 paisa. When I say one tick size will give you 2.5 rupees profit, it moves by one tick. Then 2.5 minus 60, 1.9 rupees profit one will make. You must be wondering if that is the case, then what happens to my brokerage? As Navia, you must be getting a different scheme, the monthly fixed prices. I don't know, even you assume, you see the maximum of 10 rupees per lot you are getting charged here. If this moves by 1 rupee, 1 paisa, I'm saying 1 paisa, daily the USD INR average price movement is from 30 paisa to 70 paisa, 90 paisa. In this 30 to 70 paisa movement, getting 1 paisa movement will not be that difficult. You get 1 paisa movement, your break even is that already. And if 1.1, you are in profit. Why I say 1 paisa, that's including the brokerage you are paying to Navia. So same way I'm saying, you assumingly you are buying 1 million here, for example, okay, 10,000 lots you are buying in BSC and selling in BSC, all put together, what is the charges are 6,830 rupees. Whereas you do the same in NSE, your charge will be 18,761. Why should one do it? Why should one do this particular issue? Because all the corporate banks, big time customers, why do they do in BSE because of this particular reason? Assumingly, if I do 1 million like this in a day, my loss, I may benefit when I'm doing a BSE, I'll be getting 11,928 rupees. Theoretically, if I'm trading for 20 days with the same 1 million, then I'll be making the saving of 2,38,000 rupees per month by doing it BSE. Any bank, a bank generally you take, even our national bank like IOB, Indian Bank and all, they do close to 100 millions a day. If you are doing 1 million here and if you are able to save this much money, and the year of saving, if you are doing 1 million a day and if you are doing for a whole year with BSE, your cost benefit would be 28 lakhs. So that much of money one can really save from BSE side. So I'm a trader. I'm an intraday trader. I do a swing trade. I look for market opening, senses open. It is going to be, you see that it is market is going up, 300 points, 300 points, 350, 450, it is going up. Then I see the lot of FI inventory is coming in. I see the BSE, rupee is going to strengthen. So I will sell in the INR. You sold and you want to cover it back. If you can cover it back even 2 paisa, 3 paisa, with multiple lots, kind of jobbing you do, you'll be in a profit if you are doing in BSE because the cost of it will be lesser in BSE when compared to the competition. So I request all of the currency trader, whomsoever there, please mind it. This cost saving of 75 rupees in futures and 70% in futures and 97% in options is great value. In options, energy charges 4,000 rupees per crore of premium. We are charging 100 rupees. 100 rupees is nothing but kind of nil in options, right? So please understand this is the real value proposition. Why should one go for a other exchange? If liquidity is not there, is there. If it's not there, there. And the exclusive products also there here like weekly. I use INR. So one should stay with BSE and start trading in basic currencies. So here onboarding, someone wanted to do it, go to Navia, your usage is already must have updated, or get a usage and EKYC is there, they will be doing in minute time and ask them to activate. They send the voice flash messages or voice blast. You say, yes, I accept the press one or something, your currency trading is allowed. So at the moment they allow, if there are margins, you are allowed to trade in the BSE currency. So these are the basic fundamentals I wanted to talk about. Here, the interrupt scenario also there. Sometime, for example, in this, if somebody wanted to buy in BSE and sell in NSE, there is an opportunity of trading between the exchanges. Means we can do an arbitrage between NSE BSE if at all the cost calculate. In that situation, what one can do it, because if you are buying $1 million or whatever, 10,000 lots in BSE, and you see a price difference in NSE and BSE, if that is more than that of your cost, then buy in one exchange, sell in on another exchange, it is getting netted off. The moment we buy and sell, it is getting netted off in Navia Rocket platform. I'm telling you, this can be done in equity also. Equity cash also, you see Reliance price, somewhere it is say 1,500, somewhere it is another exchange is say 2,000, let's say 2 rupees plus or 3 rupees plus. If it is covering your costs, go to multiple number of parts, like buy 1,000 shares and sell 1,000 shares, 1,000 to 2 rupees or 3 rupees minus 1 rupee profit cost, remaining 2,000 would be your profit. So an intelligent investor and an intelligent swing trading trader, if you wanted to utilize the gap between the BSE or NSE, and you can only use the Navia platform because the interoperability is live there, use it for equity also and currency also. So now, coming back to very trading, basically ends with some ideas. There only people show interest. Here I'll show some trading strategies. Basically, being an exchange person, I'm not here to trading strategies. I'm not here to advise you how to trade, but this is something to teach you on options, how one can encash money by options. Okay. So generally, somebody wanted to enter into any market for that matter, you should know whether the market is like, near the support level or resistance level or consolidation mode or bullish or bearish, which you'll have different models. I took one model here, RSI. I just analyzed on August 4 hours chart because it was in a consolidation mode. And later on, then I gone for a day thing. Again, it was in a consolidation mode, but with a downward bias. In particular situation, if at all a trader wanted to do what kind of strategy he can follow, what would happen to the strategies? I was just thinking, and then I decided, okay, let me see one or two strategies which can be put in this particular place. That was my real agenda. While doing that, I found that this long butterfly should be of helping you. Why you take this particular strategy? It is basically on a sideways trend. That considered must be knowing for more than 6 months it was only sideways. It was trading in between 74 to 75. It's not going beyond 76, and then it's not coming below 73. So basically, it was doing all sideways trades. So what we did, what I was thinking was, someone wanted to do probably if at all they created a butterfly position. It's what does it mean? Buy one ITM call and buy one more OTM call and sell two ATM calls. That is the normal idea one do. So that particular day, for example, on July 2nd, if at all they have taken this position, spot was around 74.56 and future close. That is our 30th July 75. So you buy 180, buy in the money because it is at 75, you are buying at 74.25 and sell two ATM calls, it is 74.55. So you buy at 75 calls and then buy one more out of the money. So if you do that, your net credit. So you are selling two calls. I mean, because of that, you are in credit of 190 rupees, and the profit would be maximum of 430, and maximum loss would be 320. I'll analyze the spot close also, and 20th July was 73.43. If you see the graph, how it works, right? Option payoff, your loss is limited to here 380 levels, and your profit has gone up to this 480 levels. And then further, if it is coming down, your profit is restricted at the level of 180 plus. So break-even point is here at the rate of 74.95, right? So this is how the option pace of work in a side-based market. So assumingly, the price is generally then later on after the Nirmala Sitharaman announcement, all these good things are happening, monetization and all. Generally, it is in the rupee is getting appreciated. Means here you are in the view of bearish. So in that kind of situation, I will advise you to buy one an ATM call or ATM put. Okay, so buy one ATM put and sell one OTM put. So what will happen if you get this whatever the downtrend, you get more profit. So again, you get less loss. That was the idea. So as I told you, buy one ATM. It was at the spot was at 74.56. I wanted you to buy 174.5 put You bought it with 31 paisa premium and then sell 34 put at the rate of premium of 0.08 paisa, and your net debit is minus 130 when you are entering into the position where the maximum profit will be 370 and maximum loss will be 130. This is in the downward market. You see the option graph, option payout, how it works. So here it started breaking even and there was maximum profit is here and the loss also here. So basically your maximum profit is 370 or loss is 130. So if you multiply by this number of lots, you will be in a better position. Because many know that the equity market are really doing good and it is directional. And if it is going to be directional, it is going to be plus for rupee and rupee will appreciate. And that's how you are having a bearish view of trading strategy. Now, assumingly tomorrow, this particular thing may bubble, may break. You think it may go below 30, 73 or above 76. Absolutely, it may happen so. So if that is the case, I should take maximum benefit of the outbreak and minimum loss I should make if at all. If it is trading within the range, then you will choose a long strategy where I'll ask you to simple buy one ATM put and then buy one ATM call, which means your loss level is between the put and ATM call. But the level will be higher when you enter into the breakout long strategy. The loss would be little higher. There we will say 180 rupees, 300 rupees currency. Here it will be 780 rupees. An example. And but profit will be here would be high in any of the breakouts. How it looks like. See the payoff graph. Here only the loss is the down level. Here only if it goes up, you make profit here. It is unlimited. If it is going down, also you make profit here. It is also unlimited. So when the breakout comes, you can use this strategy. So only 3 strategies as of now really look nice, and this is only example. Tomorrow you know how to do that. There are a lot of option strategies available, and you can use this. And coming to now the weekly USDNR, I already given you the unique selling points, unique ideas why you should want to go to USDNR. See, there are a lot of weekly option traders are there in the market doing it. Bank, Nifty, Sensex, Nifty, and all. Those guys can also see the weekly USDNR, which is getting expired on Friday. So if you are going in Nifty, for example, or Sensex, for example, which is getting expired at Thursday, and you wanted to have 1 more expiry, you wanted to do that play on the delta theta decay, you can come and do it on currency on a Friday. And there is one more thing called whaling. I don't think in India they use the wording for whaling, but otherwise it is in US very famous kind of trading strategy. So when you have futures, monthly futures of USD-INR, and you also have a weekly USD-INR, suppose if you are long in the monthly futures and if you are in the profit, and what you can do is that you can enter into the weekly futures, you sell them cover and sell them cover. Either you can do that or vice versa, you can buy a call, sell a call or buy a put. Sell a call and cover, sell a call and the cover, or buy a put and cover. So you can do this in rotation for all the 4 weeks till you cover the future position. So that's one of the trading strategies which option traders used to do. And cost of trading, as I told, is very, very minimal. Within 1 tick, you are able to make money. And volatility, weekly futures and options generally would be high because it expires very fast, right? So time decay is happening very fast. Suppose you enter on Friday, Thursday type or Friday type, which you all know how it will look like. Okay, so this is what finally I'm saying. So use the benefit of BSC USD-INR weekly, and we use the BSC trading cost reduction in terms of very, very minimal, where you make within 1 tick, you make profit, and more than that, use Navia Racket platform where you get the interoperability benefit. Because of that, if you want to do an arbitrage, you can do between BSE or NSE or MCI. So within the exchange, if you see a price difference, you can just jump into that, get it without any risk, you'll be able to make profit out of it. So these are the few things which I wanted to communicate to you, the team. I hope this would have been a great learning for you all. And thanks for Navia to give me this colorful evening to address all of the gathering. With this, I'll end my presentation and over to you, Billy.
Thank you, Senthil, for the presentation. So for people who are watching in, listening in, just to summarize what Senthil has been discussing is number one, that currency trading is picking up simply because peak margins have been implemented, and currency today is one contract where margins are really, really low. So, people who want to start even to learn how to trade in the markets and who want to try with smaller margins, currency generally being a contract which is an internationally driven contract, your risk also is comparatively less. So you have an opportunity to start with by trading in currency and experiencing or trying out various trading options and patterns that you would like to explore. Another thing that Senthil talked about is that even 1 paisa movement is enough to make a profit after cost, because the transaction costs are extremely low on currency trading and even more lower on the BSE platform, which is why we at Tradeplus actually have implemented currency both on BSE and NSE. There is sufficient liquidity on the BSE platform, and on an average, the currency prices, USD INR especially, moves at least 25-30 paisa a day. Today itself we saw that it has moved about 35 paisa. It opened at, I'm talking about the October USD INR contract, INR USD contract. It opened at about 73.4. It made a high of 73.78. So we almost saw a 35 paisa movement today. So basically, so even just a tick is enough to make a profit. So there is a good chance to be able to make profits out of small movements in currency. I talked about transaction charges already being lower. Senthil explained the advantages of trading on the BSE. And I saw a slide was interesting where he talked about that you can save about 2 lakh rupees a month. That's phenomenal savings if somebody is trading contracts on the BSE exchange for currencies. And of course, the highlight being that there is a weekly USD INR contract. USD INR is one of the most famous contracts in currency, and on BSE platform, you get the weekly contract is denoted by W1, W2. When you add it on the Rocket platform, you will see that option over there. And just to tell our viewers that we also have interop benefit. Senthil talked about it. So if you buy on one exchange and you're getting a better price on the other exchange, go ahead and sell it on the other exchange. Your margins will become zero, and you don't have to worry about that only NSE position that we closed on NSE or BSE has to be closed on BSE, nothing of that sort. And finally, I also want to add, I can't stop talking about Rocket. So there is a facility in Rocket under Tools menu, if you're not explored it already, where as a currency trader, you can also view the spot price. The USD INR spot price is available to you and under world markets. And you also have cross-currency spot rates also available in Rocket. So, the Senthil talked about that the reference rate RBI takes is the spot rate. And of course, the future rates are derived from the spot rates. So if you have the spot rates, live spot rate streaming, you will also be able to kind of have an early advantage to understand how the futures are going to move. So that detail, that information is also available to you on the Rocket platform. So thank you very much, Senthil, for the presentation. And if our listeners, viewers have any questions, we'll be glad to answer it here.
One more thing I forgot to mention, the freak trades will never ever happen in currency.
Yeah, we've been seeing a lot of that nowadays.
Being currency international asset, no, anytime, no time you'll see the freak trades happening.
Correct.
Currency. That's a good one point about asset class.
Harini, do we have any questions?
No, sir.
Okay, so thank you very much for this, for tuning in and listening to this webinar. I also want to take this opportunity to thank Senthil and BSE for obliging to our request to conduct this webinar. And we'll come back to you with more such webinars on other topics of your interest. Thank you so much. Thank you, Senthil.
Thank you, sir. Thanks, Vijay. Thanks, Harini, for all your support.
Yeah, thank you, sir.
Thank you.